this more, we're now joined by Vaibhav Kakkar, partner at Luthra Luthra. Thanks, Vaibhav, for joining us here on WhatsApp. This is Nayantara. I want to begin by asking you, you're one of the people, one of the representatives from industry that was talking to the DIPP to announce big bang reforms as far as FDI goes. Would you say they are big bang? There are sectoral caps that have been enhanced, for example, conditionalities that have been done away with.
I think if you were to look at overall this policy and the press note that they've released in the evening today, it is quite apparent that these changes are indeed very, very strong signs to the global investors that India is moving and progressing towards a much more easier foreign investment framework. And, if one was to look at overall changes that have happened in the FDI policy, one can really put them essentially into 2 or 3 buckets. I think one of them is the real game changer bucket. And the second one would be where administrative processes have been reduced. And the third bucket would be where, positions on certain issues which were always understood and accepted informally by the authorities and sort of also understood by the practitioners have now been, crystallized and clarified in the policy itself. The real game changer, of course, as you've very rightly pointed out, I think is in the banking and the defense sector, where if you would recall that a couple of months back when the government had come up with the old rule of composite caps and basically doing away with the sectoral, sub-limitations between FPI and FDI investment, they had left out banking sector and the defense sector. Today they have actually corrected that. And they've now, come up with, the same rule of composite limits will now apply both to banking and defense. And you would really see a lot of banking companies which essentially had, already exhausted their FPI headroom of 49%, were now being forced to look at alternative forms of capital raising such as ADR, GDR, to be able to raise more money, especially keeping in mind the Basel III requirements. I think today's policy announcement will enable such private banks to be able to raise capital on the Indian market itself. So I do expect a number of Indian private sector banks would now be coming up with a flurry of QIPs to be able to address their capital needs. Similarly, we do have certain listed defense stocks where there was an artificial sublimit of 24%. And now, with this particular change, the limit will go up to 49% and foreign investors can participate more in those companies. Of course, also the additional requirement of FIPB approval has been done away with, which I think is again a welcome change, as the gentleman from DEA pointed out, that in any event, in order to undertake defense activity, you required an industrial license, which in itself was a fairly intensive process whereby a detailed scrutiny was done by the
if I could just interrupt you there,
agency.
We know what has come out.
This requirement of additional...
Sorry to interrupt you there. While we're talking about defense, we haven't, ever since the FDI cap was introduced in defense, we haven't seen the slew of investments that had been talked about. The first one, in fact, was announced yesterday after being forged, which was the Tata one with Boeing. And I know you worked on it, that you were part of that deal. So we know what has been announced. What I want to ask you is that enough to open the floodgates for defense? Because we haven't seen the conversion of MOUs into actual deals.
I think, to be honest with you, I think defense is one space where, the movement from 49 to a higher cap is, of course, going to be an issue of more strategic nature, and that decision and that discussion needs to still happen as to whether foreign players would be comfortable in transferring technology to a JV where they own only 49% stake. But to my mind, barring increase in the sectoral cap, already certain enabling changes have happened. One of them, I think, which really did not get as much attention as it ought to, have been that in the past the government has clarified that, any parts that you're manufacturing for defense equipments would not be treated as FDI for defense purposes. What that has done has enabled a number of Indian companies to act as subcontractors and be able to, take care of the book of most of these large global OEMs. So the Tata-Boeing deal that I was a part of, which got announced yesterday, is a classic example of that. Had that policy change not happened, we would have required an FIPB approval, an industrial license, which would have needlessly been another 1 year of delay. But now they have clarified that until and unless you're actually manufacturing a military aircraft, manufacturing parts or subparts thereof by itself will not mean that it is defense. So that sort of an enabling change by itself has meant that a number of investments can happen. You're quite right that we've not seen as many JVs in this space so far. But I can tell you that there are a number of them which are on the cards, and you should see a fair bit of movement on them quite soon.
Well, I guess, Vaibhav, you have information on what we're likely to see being announced as far as the defense sector is concerned. But let me ask you about some of the other possibly game-changing changes that have come in. And let me start by asking you about media. It's been a long wait. I think for more than a decade now, news broadcast has been waiting to see whether the government would hike the FDI limit. And that's finally come through. And there's been several other changes within the media sector that the government has decided to liberalize further. How significant is that going to be? And my second question is on construction, because even last year we saw several changes being made by the government to relax the FDI policy as far as construction was concerned, and they've taken that a step further, and the big game changer there seems to be this FDI into completed projects. On those two sectors, how significant and how meaningful are the changes, and what do you expect?
I think the changes on both fronts are extremely positive. If I was to begin by the broadcasting space, broadly one can divide the broadcasting space into, carriage and content. Now, when it comes to carriage services such as hits or DTH or cable, with ever-changing technology, it was almost becoming quite easy where, if you were a company in the telecom space, you could pretty much deliver same sort of content through those mediums, and where the sectoral cap was 100%. So there was a bit of a regulatory, sort of imbalance between the telecom space where 100% was permitted and carriage services were being not permitted, which were in the broadcasting space, to be able to do the same thing which could actually happen through telecom services. So there, to have increased the cap from, in case of cable, from 49 to 100%, I think that's a very positive change. Likewise, in the DTH, in the hits space, again, increasing the sectoral cap from 74 to 100% means that we do expect a lot of deal making to happen. A lot of foreign investors who were sort of, confined to a certain specific investment because of these artificial investment limits will now be really able to participate and bring better forms of technology and bring their expertise. Some of them were a little hesitant given the sectoral caps that they were, and a lot of convoluted structures had been done to be able to give those commercial, benefits to the parties. I think on the content, I think that's a very positive change. In the content space, as you're aware, uplinking of non-news channels was already permitted up to 100%, but it was under the approval route, and they have now changed that to automatic route, so that's just administrative convenience. But the big one is, of course, as you very rightly pointed out, the news, where 26% has been increased to 49%. This was an issue on which a number of us had represented to the government that, anyone who sort of understands the finer nuances of corporate law will appreciate that once a shareholder or once a foreign investor owns more than 25%, he has the ability under law to block special resolution matters, and no additional rights accrue to him as a function of law if the investor goes up from 26 to 49%. In other words, there was absolutely no reason to keep the sector pegged at 26%, when the foreign investor could enjoy the same rights and same benefits at 49%, and that would only enable greater foreign inflows into the country. So by now having a 49% cap, we do expect a number of news broadcasters to be able to enable their foreign venture partners to be able to have a higher stake in those companies. And likewise, there are a number of broadcasting companies which are in the listed space. And we do believe that, we will see a flurry of activity in those listed stocks as well because of the liberalization that's happened. So I think all in all, broadcasting sector has been an absolute positive, and we do expect a lot of deal making to take place in these sectors. Similarly, if one was to come to real estate, if people had been sort of paying close attention, this issue of FDI in developed assets had actually come up last time round when the government had rationalized the FDI policy for construction development and had reduced the minimum capitalization and the area requirements. They had actually, introduced a clarification which suggested that, FDI can come into developed assets. But that issue had gone into a bit of a tizzy because when a number of investors went to the government was not willing to bite the bullet and, ended up sort of not giving a clear go-ahead and gave the impression that that sort of enabling, guidelines were only meant to allow FDI up to 100% in O&M activities in respect of those developed assets, which was anyways, permitted up to 100% under the automatic route.
Okay.
So a number of foreign investors and existing real estate developers were a bit disappointed. But I think now they have amply clarified. Of course, the detailed press note amending the FDI policy is going to be, there's going to be still some time before that comes out. But the language of this press release, I think, clarifies that ambiguity which had arisen in the last...
So in a word, Vaibhav, because we're completely out of time, in a word, would you say that this is a Diwali tamarka from the government?
Absolutely, particularly for particularly for real estate developers in the commercial space. I do expect a number of real estate developers who have highly leveraged to use this clarification to be now able to part ways with developed commercial assets, and a number of private equity investors would be more than willing to partake in those developed projects where there's very little execution risk. So absolute, if you look at the whole policy, some may be obvious changes, some may be administrative ease, but overall, I think 3 or 4 changes are very big by themselves, and I would certainly rate this as a very, very positive change for times to come.
Vaibhav, the changes in construction FDI, it's great news for developers, it's great news for consumers, perhaps they're going to start getting their projects more on time. But isn't this also great news for banks? Because, all the collateral that is with them, if they want to, start monetizing on all of that collateral, they can now sell that to foreign investors.
That's absolutely right. I think for that, the previous prescription of the government had already addressed it to some extent, where they had clarified that FDI can come into developing assets, no matter whether they're 70% developed or 80% developed, so long as they bring the money within 10 years of the commencement of construction of the project. So partially developed projects, which number of them had been stalled because there was, liquidity crisis, that issue to a large extent had been addressed in the previous policy liberalization. But yes, you are absolutely right. I think this just completely seals it, whereby now for existing developed assets, banks would now be able to at least rely more on, structures where foreign investors are able to easily partake without any policy limitations. Number of investors, who are very, very reluctant to participate in developing real estate projects simply because of the execution risk, will, I think, now be able to participate and enjoy the yield, which is still relatively far more competitive than some of the other jurisdictions.
Right.
So, and banks would, of course, be a clear beneficiary, whereby now they will be able to take recourse to much more credible, borrowers.
Okay, so clearly the
real overall, I think very positive changes in.
Right, so that's a game changer. At least we know that for banking, for the real estate sector and media, we've seen a game changer being announced by the government. Vaibhav Kakkar, thanks so much for joining us here on What's On, and here's also wishing you a very happy Diwali.